It's the moment of truth for stocks. Are we about to break out or stocks about to come crashing lower as we start to approach critical Fibonacci levels along with GEX exposure at this key level? Now, we come over and look at how the Nifty spread across the board today. The Dow was up 202 points. The Nasdaq was up 598 points. S&P 500 up 102 points, with the Russell 2000 being up 4.27. Now we look at advancing issues versus declining. We had 61.3% of issues advancing on the day. Then when we come over and look at the sectors across the board, we only had two sectors in the red: energy and consumer defensives. Every other sector was in the green, and technology was near the top. It was not the tippy top, as communication services did eke out technology. But speaking of some big movers out there, we come over and look at Google. Massive gap on the way up, closing near session highs. Google up 6.25%. We take a look at AVGO, Broadcom up 11.03%. And now we got to couple that with the facts that the VIX came crashing lower today as well. Today, the VIX was down 12.3%. And we look at this on the daily chart. This is back-to-back days where we have declined more than 10%. Keep in mind, the rule with the VIX is whenever we go down 10%, expect the market to have a down day in the next 1 to 2 days. Well, Friday, we're down over 10%. So either today, which we know today was not a down day, or Tuesday was going to be a down day. And then we couple that when we had that same rule take effect from today. However, we come over and look at the fear and greed index. We are still well into extreme fear. We have a reading of 14. Now, some of the optimism out there today with the AI had to do with Lutnick's decision on NVIDIA's AI H200 chip. China sales now sits on Trump's desk, and this can revive or at least give traders a hope that NVIDIA and AI is not about to pop. We see NVIDIA is riding up on that optimism out there, with NVIDIA being up 2.05%. When we look at the SPY real quick, SPY today gapping up, not even trying to close that gap, and the SPY was up 1.48%. Then we come over and look at the RSP, the equal weight S&P 500. Drastically different story. We can see RSP was only up 0.4%. So if it wasn't for the heavy hitters in the Mag 7, we would be in a lot more trouble than where we're at. We can see right here, when we actually look at the Mag 7 stocks, NVIDIA up 2%, Apple up 1.66%, Google up 6.31%, Microsoft up 0.40%, Tesla up almost 7% at 6.82%, and Amazon closing out up 2.53%, and AVGO 11%. AMD 5.53%. Now, during the seasonality that we're in right now, this tends to be a bullish week for the market, the week of Thanksgiving. We come over and look at the dollar index, basically closing with a doji-ish looking candle. Then we come over and look at the precious metal gold. Gold today having a nice little rally on the way up. Looks like the MACD indicator could be in the early stages of trying to firm up. Now, tomorrow is going to be critical out here because this could be a make or break. This could actually validate that stat that we talked about with the VIX. Tomorrow at 8:30 a.m., we have the core PPI coming out, core retail sales coming out. Then at 10 a.m., we have pending home sales and the Richmond Manufacturing Index. So tomorrow could provide the volatility that could actually make or break the stock market. We look at the SPY out here on the daily chart. MACD indicator is below the zero line, looking like it wants to cross on the way up. Now, this is a candle I talked about in Sunday's video. If we can get back above this candle, which was from last Thursday, then I want to be looking at the buy side of the market. Well, at least at this point today, we have not got back above that candle. But something that we have done, we have been able to clear over 50% of this nasty down candle, which increases the probabilities that the market will come all the way back up there, undoing that down candle we had in the market. On the 4-hour chart, you can see the MACD indicator trying to cross to the upside. And then we come over and look at the 30-minute chart. We can see gap up today, run up, and then sideways out here. Now, notice we did get into this minus development area all within the profile. But on the 30-minute chart, the MACD indicator is looking a bit weak at this moment. We see the two lines just about to cross to the downside. Now, we come over and look at the futures markets for the S&P 500. We talked about this in Sunday's video. We wanted to pull a Fibonacci retracement from the high from Thursday all the way down to the low from last week. And if we can break the 50% level, let's watch the 61.8. However, if we start breaking that 786, which today we got very close to it, that's going to be a price point of 67.34. We start getting above that, we're probably coming up towards this next high volume node at 67.63. Then probably going to undo that whole nasty down candle that we saw last Thursday. Now, if indeed that does take shape, watch out. We're probably going to see even higher prices. And let's not forget, we still have this untested point of control all the way up here at 6873.25. However, when we come over and look at the daily charts, notice today we were unable to take out the P point. The market said, nah, that's cute. I do not want to go down just yet. And instead, during London, came down, filled the gap, and then rocketed on the way up. Now, something we were able to do, we barely closed above value area high on Friday. We were able to go down, retest that value area high, but we did not take out the P point. However, tonight, when we get the new P points out, that is going to be a level I want to focus on. Also, look at this minus development area within the profile. We can see anywhere from 66.95 down here to about 66.89. I do think this is a high probability target. Now, what I'd like to see, can we break above value area high at 67.30, then start to come down? If so, target the point of control, 67.23. Anything below that, that's where I want to turn my attentions down towards the minus development area. If we break value area high and we can stay above it, keyword stay above it, that's when I want to turn my attentions right back over to the weekly volume profile chart and really up here towards that untested point of control at 68.73. Now, I do want to let you guys know right now, Black Friday sales are in effect. Take Profit Trader, 30% off all your valuation accounts, 0 activation fee, and you can get your test refunded during your first payout. To take advantage of this offer, use the link in the description box down below. Use code epitome at checkout. So now let's go back over and take a look at some of the gamma exposure levels real quick. And notice today we have a lot of gamma exposure right around that 670 price point. Well, if we come back over and look at the SPY was having one heck of a hard time really getting through that 670 price point. Is it any real surprise where that heavy gamma exposure is? Well, they're going to try to defend that. And if we can get above that level, if we can start clearing above that level, the next area I want to watch is really going to be right up here about 680 on the SPY. However, we start breaking down, 660 then becomes a very high probability target location for me. And then all this gamma exposure we have just below us as well. Now, when we come over and we take a look at the QQQs on the daily chart, we had a big, massive gap on the way up. MACD indicator is below the 0 line and it's trying to hook up at this moment. Now, we are within the thick part of this composite profile area on the volume profile. Can we get above this area, which really we got to get above Thursday's high? If we get above Thursday's high and we can hold it, then I think we're going to start trying to make our way back to all-time highs. On the 4-hour chart at this point, if we start to turn down anywhere from this area, this would still be a high, lower high, lower high, lower high, and a lower high. However, we break Thursday's high, then we no longer have a case where we're making lower highs in the market. MACD indicator did get a bullish cross out there. 30-minute chart, again, above the 0 line, and we're starting to get that roll effect. We gapped up today. We just kept running up. We came right towards this minus development area on the profile, and then we just basically consolidated in that area. And quite often, that's what happens when we come into a minus development area. We either reject, back away from it, or we consolidate right around that minus development area. Now, we come over and look at the gamma exposure levels real quick. Notice right here, right around 605, we have a lot of gamma exposure, but then all the way up here at about 620. If you look at where we close, we actually closed at 605. After hours, we're up a little bit. Now, if we can hold above 605, like I said, 620 would be in the cards. If we look at this on the daily chart, 620 would be all the way above Thursday's high. And if you notice, that would be all the way up here, filling the gap that we left behind back on November 13th. Now, when we come over and look at the Nasdaq futures real quick, notice we almost made it up to the 78.6 Fibonacci retracement level. If we start breaking above it, then I want to look for higher prices. But if we start to turn down around the 78.6, and this will also hold true for the S&P 500, we could actually be setting up an A to B equals C to D pattern on the way down. However, if we're accepting price above the 786, then I'm no longer going to be looking for any type of ABC pattern on the way down. And I'm really going to start turning my attentions towards that nasty down candle that we saw last Thursday, looking for the market to undo that complete candle and maybe start working towards this structure breakdown point and maybe even this untested point of control, 25,611.75. We come over and look at the daily volume profile real quick. Here's the area that we drew out this morning on the live stream, a basic structure market breakdown that the market has not come back and tested. And I said this morning on the live stream, I don't know if we'll get there today. I thought that was a little bit far away. And look, we were very, very close towards that area. Overnight, we pushed up, we had all this consolidation, and once we broke, it was off to the races. And I really did not want to look for the market to go back down. unless we could trade back below the 1-day max right over here. I said, if we can get back below that level, I would then want to turn on the sell side of the market. If we stay above it, I have no ambitions to try to short this market. Instead, just let it go, let it go, let it go. And there'll be other opportunities out there. So now as we look at the volume profile levels, value area high is going to be up here, 24,993.50. Tonight or tomorrow, if we get above that area, we come down, then I'd want to target the point of control. I'd want to target value area low, but in between there, we do have a minus development area I like, somewhere around 24,819. Then the high volume areas, anywhere from 739.5, 713, and then value area low. Anything below that, I'd want to play right back towards this structure breakout point. See, can we come back and test it? However, it's all going to hinge. Do we break above value area high and come back down? Or number two scenario, do we break below the point of control? And then can we hold below it? If we're trading below the point of control, I do want to turn my attentions towards some of these targets. Now, if you're looking for a quicker little scalp target, 868 would also be a high volume node on the composite profile, which could provide a very good target for us. Now, if you guys trade with Take Profit Trader or you're ever thinking about trading with them, then you want to make sure you know this one very important rule. And to see what that rule is, watch this next video right here.